Well, rates are up again, and unemployment numbers that came out today did not help us. Hey, everybody, it's Mark Johnson at Guaranteed Rate. And last week's survey for Freddie Mac came back with showing us that interest rates went up again to 7.49. This is including some discount points in there. If you take away discount points, we're over 8% for most loans right now. So the intention here was that this week unemployment numbers would come out and that they would be bad unemployment numbers, which would be good for interest rates. But instead, unemployment numbers came up and there were job creations of 338,000 jobs when the forecast was going to be 117,000. And then the previous month was revised upwards as well. And so unemployment pretty much stayed the same at 3.8%. Now, in the interest rate environment here, we saw a knee-jerk reaction here when we saw interest rates come out first thing this morning. They've recovered just a little bit. There's the interest rate bond market right there, and here's the 10-year Treasury. You notice that the 10-year Treasury went up all the way to that ceiling there, and then it came back down, which is good. But still, it doesn't help our interest rate situation. And the biggest fear is that people are thinking now that the Federal Reserve will for sure raise interest rates again in their November meeting, which isn't going to be friendly for interest rates. So the bottom line here is that we have not seen interest rates this high probably, since 2000. I would say, I think it was, I looked it up the other day. I think it was December of 2000. And, 23 years ago today, interest rates were up at 7.84. So it's been a long, long time since we've had interest rates this high. The question is like, what do we do and where do we go from here? Well, the answer, my friend, is this. If you are going to stay in a home for 5, 7 years, something like that, you should still buy, and if you have the means to be able to get approved for a loan at these interest rates, the best investment you can still make is buying a home. If you're going to stay in your home maybe 2 to 3 years and maybe moving somewhere else, it probably is better just to rent right now. So even though we're going to see home prices increase, we see the demand slowing for homes, but also we're not seeing listings right now, and so the inventory level is still very, very thin out there. So if you're looking to buy a house, go out and buy it. Now, I have some new news that I just wanted to shout out to you, is that Fannie Mae came out and said they're going to allow 5% down on owner-occupied 2 to 3 to 4 unit homes starting November 18th. So stay tuned. We don't have a lot of detail on there. I imagine it's going to be just pretty much like any other kind of down payment, whether it's 10%, 15, 20, 25%. They're still going to have the same underwriting guidelines. But if you want to invest in real estate, think about maybe buying a duplex or it's a triplex or a fourplex. Owner occupying that, you only have to stay there 1 year, and then you can move out of that and buy another home with another 5% down. So it's coming, and it's going to be great. It's going to open up, some opportunities for you to invest in real estate like we used to do. Anyway, have a great week. If you need anything, don't hesitate to give me a call or DM me here. Please like and share this video with your friends and family. All right, have a great day.